All right, so welcome to another video. Today I want to share with you some insight on top 10 oversold tech stocks that could explode here in the next few months, or it could be in the next year, but nevertheless they are oversold for the time being, and I want to share those with you so that way you get a little bit of an insight on, hey, these could be a good, interesting buying opportunity. All right, let's kick things off here first, but before we do, remember to keep in mind these are not recommendations to buy, sell, or trade anything. It's just my own personal opinion. If you want to grab my opinion, you can check it out on our website at tradersfly.com. You can also check out the Traders Fly YouTube channel, which is different from the Critical Charts one. This one we focus on option trading, and you can check out the Discord channel right below this video where I post some interesting charts, supports, resistance levels as well. It's kind of like a chat room, but I also share some announcements in there as well. Okay, let's get started, and we're going to go ahead and take a look at some of these stocks. I'll give you a little bit of insight here as we kind of go into it. I've got my list here. We're going to start out with Adobe here, and Adobe, as we take a look here, Adobe has been pulling back. It was near the $700 price level, and the stock is down about 41% or so. So you can see this chart doesn't look very good and looks kind of nasty, but that's kind of what you're looking for, is that eventually you probably want it to pick up some speed, but you're kind of near cutting in half. It's one of the leaders there in Adobe Photoshop, any of the graphic design software. So this stock does have some serious and solid potential. Here we've have this downward trend here. And what we're looking for is that when it can bounce above this level, let's just say it gets down to 400, when it can break through that level right here, that's what you would look for to get into that stock. But for the moment, we are just continuing to pull back, and this could still pull back for a little while longer. Who knows, down to 400, 300, we don't know. But it's one to keep an eye on, that once you start seeing a sideways base, a break to the upside, it's one that you may want to take a look at, especially if you get the sideways action and then a breakthrough. That would be a buying opportunity if you got the volume coming in. Okay, the next one we want to take a look at is Facebook. This one's just been selling off like crazy after earnings. Also now with a Russia thing that they've went ahead and kind of closed down Facebook. But what you'll see here is we're coming in and basing into the support level kind of right here, and we've got a few support points. So towards normal regular oversold levels, it could actually still pull back a little bit further. 200 seemed like it could have held there a little bit, but it looks like it still went under that level. And the reason I say 200 is because we played a lot in the past over here at those price points and price levels. So but right now it's under there, and I think we've still got a lot of weakness in there. It may take a bit of time for it to kind of turn around, but even then 180 it could start turning, and then once you start seeing this turn around, that could be another buying opportunity, because this stock is oversold, I believe, at least for the short term, at 51%. So we were down up at the highs around 382 or so, and now we are at about 190, 180 here, down 51%. So that's pretty solid. Here we go with Zoom as well. This one peak at the Zoom era, where everybody was into it because we were doing Zoom meetings, and I still do Zoom meetings for a lot of clientele that we have because it's easy to record and people are comfortable with it. But this stock is down 83%. We were near the highs at around $600, topped out down to about $100 a share, coming into a nice support level where we had kind of IPO and pop. So it's coming in a nice spot. I do think over here at the 600, maybe it was a little overvalued, and people got into it. So coming back now, we were pulling back a bit. I think you're getting into more fair value, somewhere maybe around that 200 could be a better fair value area. I don't know, maybe 100 is oversold, maybe 200 is more fair valued, 600 is probably overbought, so somewhere around that range. So we'll see, but it's one to keep an eye on, because once the stock starts to stabilize a little more and we start reverting back to the upside, then this is one to kind of keep an eye on. Even if it gets down to 60, this will be kind of more at the IPO price level. Wouldn't that be a kind of interesting if it got into that level? So anyways, this is definitely one to check out. Daku is another one. Again, I think this stock was probably overbought at around $300 a share for document services. Yes, they do have the real estate market dominated, but there's so many other document services out there. I've seen even Indian companies create document services that are really good. It's just that this one has the market share from from actually the marketing of the customers, and it's done quite well. So here was the massive explosive run that we've had, and this move here to this upside did phenomenal and fantastic. This stock kind of topped out, and we've got a lot of pullback. So it's coming into a possible good value opportunity. And when you start seeing that, right around $70 a share, it's looking pretty good. Recently with the earnings, just didn't look good. You can see there's problems. And that's why I say, maybe it may take another quarter or two. It could go in and get down in here, who knows, to the $50 level, maybe to the $45 level. But that's what you're looking for a possible turnaround here in the future, maybe in the next year or so. Again, these are for a longer term play when you're looking at tech stocks. Here's Shopify. Here's another one. This stock just grinded up near the $2,000 level, about $1,800 a share. Just look at this growth. 2016, boom, all the way over there. So it's like 20 bucks a share. And now, oh my goodness, this is a jumbo jet, kind of how fast this stock has flown. But now it's coming into a nice round number, around $500 a share. You could also see some peaks here in the past. So it could be coming into some support. I don't know if the selling is still done. There's obviously some other key levels that it could get down into. It just depends how far it'll go. There's always some swing points there, but you're pulling back from this stock from the highs. You're going in at about 68, almost 70% pullback, and that's fairly significant. And this stock was grinding up quite a bit. I mean, it was hanging out for a good year or two around that $1,500 level. Now it's at 500, so it's a huge steep discount when you really think about it relatively to the last couple of years. So if you liked it in the last few years and now we're down 70%, that seems like a good buying opportunity in that case. All right, Netflix, also another one. Some bad earnings here. Stock sold off in a big, nasty way. Even in that earnings call, it was down 31%. But overall, from the $700 price level, we're down about 51, almost 52%. So again, serious pullback here. 257 is kind of a solid support level, very clear from the past support of 2019. I don't know, and I don't think it'll get there. But it is one to watch. We tried to hold some of this support or past resistance around 387, 390, but the stock could not do it. So that was right around that 400 price point. And now we'll see where it's going to go. Right now it's in no man's land. Maybe around that 300 is where we could start seeing a base. That 300 was also lining up right in the past of 2020, early 2020. So we'll see if it kind of can get down in there and then maybe bounce. And that could be a buying opportunity at that point. Again, usually it takes a couple quarters to get all these things situated. Let's look at Intuit. It's another one that when you look at the trend in the chart just from 2020, 2021, it's a software company. It's a tech company. It's been going up. It's an accounting, but it just grinds up. And now we've been pulling back quite heavily. So from these highs of about $700 a share, the stock has pulled back about 40%. So what I would look to see is a little bit of a retracement here, just like we did here. So we got A to B, B to C, C to D pattern. So if we get another little retracement, pull back, maybe retest, and then a break to the upside, that would be nice if we can get kind of a bounce, something like a bottom in these levels or something like around that level. Where it comes back, bounces, maybe retest that bottom, and then bounces and holds. For now, still just going down, still looking weak, but it's one to keep on the radar. So a lot of these stocks, as I mentioned, they are weak. They're still going down, but they're ones to keep an eye on. So that way, when they're ready to break higher, these are the ones you could kind of get into or take a look at getting into. All right, the next two I'm going to bond together. We've got PayPal, which has been selling off quite a lot. A lot of people don't like PayPal, and even us as a company, we moved away from it, but they've got a huge other market of individual selling kind of dominated fairly well. It's an early adopter, and Square. So both of these have sold off quite a bit. And you can see this one's at $100 a share. And it's coming right into this support level. So right here, broke out, it's coming right in. Maybe it's going to hold. And then PayPal, really interesting, very similar to the dollar per share value. Obviously, different amount of market share, but also kind of sold off quite heavily. So these two are ones to watch out for. There's a lot of selling pressure here in PayPal, even to the point where people are probably shorting it much more so than they should. Whereas with Square, probably less people shorting it, but still, this one's probably because it's newer, it's more loved. But these are the two to also keep an eye on, because this one is down about 66%, whereas with PayPal, when you're down, you're looking at about 69, almost 70%. So very, very significant. Spotify is another one that I'm watching. This one had a lot of love. I don't really care too much for music companies personally, but you could see there was this breakout right here. Stock moved really well. So we had this sideways consolidation pattern, broke out real nice, real well, but now it's almost coming back into the support level near the $100 level, right? It's near the $100 level. And if that happens, that could be a buying opportunity if it starts reversing course. Personally, for me, these music companies, they struggle to make money just in general. It's tough, like with Pandora, it's just a lot of trouble in the music space with the royalties and everything. They seem to be doing it, the best out of any of the music companies, but in either case, it's a struggle. So, but this is one to keep an eye on. If you start reversing and seeing course, it could be one to at least get a nice run out of it. Okay, then I've got another group for you. We've got Pinterest here, also selling off quite a bit. So this is my social media group here. Facebook, I kind of did a little separate. This is kind of like my micro social media group. And we've got 67, 68% down on Pinterest, which is, very similar. Also, you got Twitter. And here from the highs, you're down about 58%, and then Snap, which is more of the newer one. So I think it's probably the hotter one that people like, but also down about 64%. So when you look at all these stocks, they are down quite a bit. And you can see that, they're coming into some of those support levels and areas. I classify a little different than Facebook because Facebook's kind of the big daddy of them all. So that's why if I look at kind of Twitter or Pinterest or even Snap, they are a little bit different. Okay, and the last one I have for you is Fiverr. And Fiverr is where you sell things for kind of $5 or less. It's kind of coming into that IPO price as well, near the $50 level. Not quite 50, but near there. So if this starts kind of reversing course here soon, that'd be good. Even if it pulls back a bit and then starts moving up, it could be one to watch. Again, more than likely, all these stocks are not going to zero. So there will be a few that will start holding things out and start moving higher soon or eventually. And these are the things you're waiting for that turnaround if you're a long investor, and waiting for them to kind of pop. I think it's too late to short these things. You don't want to be doing that at this point. If they were way up here, that would be the time to short. Nowadays, it's already getting into the oversold level because some of these things are just down quite a bit. And this one's down already 82% from those highs. So be careful. There's other stuff like this is a kind of a bonus for you. T-Doc, that's also in the $50 price range. It's kind of like a health but technology sector. So there's always those hybrids that are very interesting, but it's coming right into the 50. There's also some support levels right there at that zone. So keep an eye on stuff like this as well. But I thought I'd just kind of mention it as a little bonus as number 11 here for you. So anyway, I hope that helps. Thank you so much for joining me. Definitely check out the option trading channel if you're interested in that, or the Discord channel, and grab our newsletter list if you want to get notified as I release new freebies and goodies. That'll be on tradersfly.com. There's also a lot of live classes that I do, and the way you get notified for that is if you go to the freebies and grab one of these templates or something like that, you'll get notified as we go live, or as I do any live classes and that kind of thing. So once you click one, put in your email address, and you'll be all set. Anyway, thank you so much for joining me. Truly appreciate it. Hope you enjoyed this video. Enjoy the rest of the week and weekend ahead, and I will see you on the next one.